start by your thoughts on that market finally coming up after a 7-day bear run.
Oh, thank you. I think that's normal. I mean, looking at what the market has done in the last 1.5 weeks, where we have seen the market trading on the on the south trend. I mean, the market has been going down, and that created another entry opportunity for value investors, which might like to lock in at this pricing that we're beginning to see. That firmed up the valuation of the companies traded on the exchange, and I think that people are just willing to take that opportunity, and they're looking in back to the value companies.
I mean, speaking to some analysts, there is a view that this market is probably not going to go anywhere over the next few weeks, more so because we have
year-end
impact.
Why I buy your opinion, going by that, we know that the liquidity we have in the market is basically coming from the foreign investors. They provide like almost 3/4 of the liquidity, and they will have to make a return at the end of the year. So probably by December they're closing down their books. But at the same time, we still have some local institutional investors. We have the pension funds, we have the insurance that have a huge amount of funds. And let's not forget that on the fixed income side, where they normally get other exposure to just to balance the portfolio, there seems to be kind of lulling in that market. So the only option and the alternative they have will still be to look at the equities market. And on that side, we still see the market doing, year to date now the market is doing like 19-20%, but we believe that the market will do 25% by year end. So we still see value in this market.
Even with where bond prices are, because like you mentioned, well, we have seen bond prices come up significantly. I mean, someone did make a point that even treasury bill yields are now in double digits.
Okay.
I mean, that would have a bearing on the equity market, wouldn't it?
Yes, but when you're looking, when you are doing the valuation of bond, you have to look at the yield vis-a-vis the pricing. And in anticipation of what AMCON is going to do probably before the end of the year, we expect that there might be move away from that bond market, going that there will be influx of instruments in the market, which will further take down the price. Because when you're valuing the bond, you're looking at the yields, but you also have to look at the price of the bond. There are some people that have locked in at a higher price, and for them to get out of the position, that they will either take a loss, which they might not want to do. So when you talk about yields, that's not the only thing we look at when you're doing the valuation of bond and when you're looking at your portfolio. You have to look at the price that you got in that. If you want to get it now, even at this level of yields that you have now, will you even break even at that point? And I don't see that happening before the end of the year.
I was just looking at maybe some bond investors looking at yields at the levels they are now and probably moving in. But let's move on to some company news. USC, obviously that's the big news. The deal that they are doing with Tiger Brands. Okay. The CEO was on Power Lunch earlier today, giving us some insight into that deal. First of all, let me get your thoughts on how that deal is impacting your rating of USC.
Well, for us at Afrinvest, we believe that that's a very fantastic deal they've done. And it's going to be a win-win both for USC and for Tiger Brand. Tiger Brand is one of the largest, if not the largest, consumer company on the Johannesburg Stock Exchange. And they're coming into a market of 150 million people, like triple of what you have in Johannesburg or in South Africa. So that gives them the potential of this market is growing. We all know that the middle class, that's the people that really buy the products that USC will make, is also growing on the day, riding on the back of the new minimum wage. I mean, the salary structure for the civil servants that the government is also going to implement before the end of the year, which will translate to higher consuming power, purchasing power for people. So we believe on the back of this, for Tiger Brand, they are going to definitely be able to tap into the market. And for USC, I believe it's also a win-win for them, like I said. It's going to also give them an opportunity to have people that understand this market. If you look at the antecedent of USC prior to, let's say, in the late 90s, early 2000, you find out that they control like almost more than half of the market share when you talk of consumer good market. But for them to manage that competition in the last decade, less than the last 10 years, has been challenging, and they've actually lost a large portion of that market share that they controlled. So bringing the brand of Tiger on board now will also give them that advantage to be able to penetrate to the market, probably capture the more market share, and if they're going to get funds from this divestment, that might even be useful for them to finance their market expansion plans and probably gather their market share that they've lost in the past back.
Okay, so obviously positive for USC.
It's positive. It's win-win for both USC and for Tiger Brand.
What about valuation? I mean, currently it's trading at about 14 naira. Do you think it's attractive at that level, or do you think it's already reached at that price?
Well, there's a bit of an upside. We still see like between 7.5 to 10% upside in the next 6 to 12 months. And I believe everything will still be depending on what Tiger Brand is bringing on board. And by the time we start to see what they're doing, how it cascades down to the bottom line, to the margins. Because one thing that is very key in this market, and we, the Tiger Brands, will also need to deal with, is operating cost. It's higher, it's different to what you have in Johannesburg, and they need to understand that for you to make the same margin that you're making on the Johannesburg Stock Exchange or in the South African market, then you need to focus more in cutting your costs down.
And indeed, a very different terrain over here in Nigeria.